Today on the CEO Barbecue, we're looking for gold in the Western US together with Revival Gold. If you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to researchtalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Revival Gold is listed as RVG on the TSX Ventures Exchange, where over the last 3 months, the average volume has been about 280,000 shares. With a market cap of now just under $142 million and 272 million shares outstanding, today this is a 52-cent stock with a 52-week high of 58 cents and a 52-week low of 22.5 cents. The 50-day moving average is at 50.8 and the 200-day moving average is at 38.6 cents, which means the stock is now trading above both of them. No fancy long intro needed here for Revival, though, since Hugh's been on the channel a couple of times over the last year or so. For those of you who want a deep dive into the PEA or a deep dive on Hugh himself, as well as the company's financial situation and an overall business plan and everything in between, there's going to be a playlist containing all of the previous conversations linked in the description of this video. Time for me to shut up already, though, and Hugh, let you do the talking. But first of all, thank you for your time.
Oh, it's great to be with you, Antonio. Here we are in August, and boy, a lot's changed since we last spoke. I think that was April.
That's it. Just over 4 months ago was the last time we spoke. Gold kept going up, and things seem to be turning up for the juniors as well. Dare I say it without jinxing it, maybe? I know you've been traveling for conferences and investor meetings for a while now, and since this is happening. So what's your current read on the market from those conversations, talking to essentially the smart money in the room? What's your current read on the market for explorers and developers specifically?
I think the theme is playing out, that we've been talking about in the past, which is that there's a scarcity of good projects in good locations against a rising gold price environment and increasingly more robust balance sheets, cash generation among the plus or minus 3 dozen producers out there. And we're seeing that in transactions for assets at prices which I think are starting to reflect that underlying value based on where the gold price is today.
What's the most kind of interesting conversation or eye-opening conversation that you've had with some of the larger money managers in the space? I know you're close to Dundee, other groups as well that are invested in your story. Yeah, what's kind of the most interesting conversation you've had recently?
Well, I think it's really interesting to see that, the consolidation trend continues. Equinox successfully has pulled off a combination with Calibre. And then we've seen these disposals of assets, non-core assets, receive a lot of funding and a lot of interest. Most recently, again, out of Equinox was the sale of the Pan mine. And at a good price for something that's really a sub 50,000 ounce a year production opportunity, but in the United States. And I think that bodes well for those that are positioned in the development space. We are seeing equity values go up, equity prices go up, and there seems to be a lot more confidence among investors in the space. You and I were talking off air about the Beaver Creek Conference, which is an industry meetup that takes place in September. I predict record numbers this year, and we're seeing a lot of meetings come through from new equity participants in the space, which just goes to show that there is a lot of interest in the development space for gold projects in good locations.
Is that something you're seeing kind of in your email inbox or in your phone, like new people, maybe not so well experienced mining people coming into the space? Is that already happening?
And return of investors who once were very active in the space. And I think there's a renewed confidence. Look, we've just completed, not to skip ahead too quickly here, but we just completed a $29 million raise, underpinned by two strategics into our business. And these are new steps for these particular strategics. EMR Capital, a well-known mining investor, but rarely takes equity stakes in public companies. And this is indicative of their interest and appetite for exposure. And there's not a lot of places to get it, but in these development companies like Revival Gold that have high quality assets in good locations.
Well, this is somewhat the biggest elephant in the room right now for you. Indeed, that financing intended as 24 million at first, closed at 29, so that's 20% more than what you initially thought. Why the upsize if you thought you could do it with 24? Would you take 29?
Yeah, I think that there is a couple of reasons for that. First of all, Dundee Corporation, a strategic investor in Revival Gold and a very smart participant in the company, wanted to exercise an anti-dilution right. So we had to bring them in for their share of the financing. And then secondly, we had a lot of interest from our existing owners who have been supportive along the way, and we have had to make room to accommodate those folks in the raise that was principally led by EMR Capital. So you can imagine it's been a really interesting past few months as we've navigated the interest in the company, not just in the financing that was announced, but there was a lot going on in the background. And I think I alluded to some of that with you when we spoke in April. A lot of corporate and strategic investor interest in what Revival Gold's been doing. We went through a lot of due diligence, a lot of site visits to optimize the financing that we did do. And I think it's a really good outcome for our owners. We can talk about some of the details of that, but it was a very well sought after funding, and I think it unlocks a ton of value in the company here.
Did insiders participate in that financing?
We did not, specifically because we didn't want to be seen to be running in front of other investors. And this was a straight equity financing. So in that respect, we kept it really clean. And so our existing investors who felt the need to top up and who could not participate in the financing have been doing so in the market. And in fact, myself, I just bought 200,000 shares above the issue price in the market after the raise. Again, we did not want to do any insider buying in the financing and be seen to be front-running investors' opportunity to buy the stock, and rather chose to be supportive in the market post-financing and at prices higher than what we did the financing.
Do you know how many parties participated in total in that financing?
It was a really tight list, less than half a dozen.
Oh, really? Wow. For 29 million bucks, that is really tight. But yeah, I mean, you have a principal, and then Dundee topped up as well.
Sorry, I should, Antonio, I should just to be, I know folks will watch my numbers. Half a dozen in the public portion, and then we had EMR Capital and Dundee.
Right. Okay. Well, still, I mean, that's eight people. Eight parties, not eight people. But okay, how far will that money get you? When's the next time you foresee needing to come back to the market?
Well, the ironic thing is, with the backing of EMR Capital and Dundee Corporation and our existing institutional investors, there's a lot of pressure for us to move quickly. And to spend quickly. So we don't think about it in terms of when do we have to come back to the market, because we have the backing of a of groups that want to invest a lot more money and actually want to see us move more quickly towards our ultimate goal of going into production and continuing to build out these large resources we have in the domestic United States. So the way to think about it is, how quickly can we deploy capital to advance these assets? And the answer to that question is in the initial phase of work that we announced and commenced with, actually before we completed the financing, which is a 13,000 meter drill program at our Mercur gold project and a approximately 4,000 meter drill program at our Beartrack-Arnett project. We now have 2 rigs drilling on our Mercur project. We have a 3rd rig on its way to Mercur. That is in addition, as we want to accelerate the pace of drilling on Mercur. And then we'll have a 4th rig arriving later in the fall on our Beartrack-Arnett project, as we want to continue to pursue the upside potential on that very large gold system in Idaho.
Well, that's something that we'll talk about. And I'm thinking about, is it going to be enough money to buy you an updated PEA in Mercur, essentially? That's what I'm asking. Yeah.
Yeah, okay. So thanks for the clarification. The answer is no. What we're focused on right now is the drilling to, first of all, convert inferred material to measured and indicated. Secondly, to collect metallurgical sample material to expand our geological metallurgical model for the deposit. And thirdly, of course, we want to start moving on permitting. So we've got a lot of work underway in terms of collecting archaeological data, baseline preparations, which we want to formally commence at the beginning of next year on our Mercur Gold project. So there's a lot of activity in support of the next engineering step, which would be a PFS on our Mercur Gold project. At Beartrack-Arnett, we've already completed a PFS. We're in permitting preparations there, but the emphasis really shifts to exploration there, because the priority project, the fastest path for us to get into production and free cash flow, is through our Mercur project. It's on private ground, and it'll move faster than Beartrack-Arnett into production. And that's why the emphasis from an engineering point of view is on moving Mercur forward. And the emphasis from an exploration point of view is to continue to grow the 4.6 million ounce resource at Beartrack-Arnett in Idaho.
Well, that's
very
something
complementary.
That's something I wanted you to expand on here, Hugh, because this ties nicely into a broader business strategy discussion. We have talked about it before, sort of what your vision is for Revival, but why put so much money and focus on Mercur instead of, again, bringing Beartrack-Arnett over the line a little bit more quicker? Like, I understand from the perspective of maybe a little bit more attention to Mercur, but Mercur seems to be getting, the bulk of the attention here. And the latter is at a PFS stage, and it seems like in this environment for gold, producers are getting rewarded. So yeah, talk to me a little bit more in depth about that business decision there.
So it really comes down to the land position, and the real benefit of Mercur is that we can move more quickly through the process of permitting. So even though the engineering is less advanced at our Mercur project in Utah than it is at our Beartrack-Arnett project in Idaho, the timeline to get that project into production is faster. We think it'll be in the order of a couple of years to complete the permitting on Mercur. We will formally commence that process beginning of next year. Based on where we are right now, the engineering will fall into line as alongside of that permitting process. It's relatively straightforward because we don't see a lot of groundwater. This project is in a dry location and it's on private ground, which means we work through the state authorities. So there's a lot of, I know folks are hearing a lot of chatter about permitting reform in Europe, in Canada, and also, of course, in the United States. We're hearing a lot of chatter around executive orders out of the White House in the US to move more quickly through these permitting steps. But none of that, we are not dependent on any of that at Mercur. It's on our project resources on private land, and we'll go through the State Department of Oil, Gas, and Mining's permitting processes, and so that's a quicker process for us, is a quicker sequence of events, and it's a lot less costly for us. So that's where we want to put our money. And why do we do that strategically? Why do we do that? Because we want to drive our assets to free cash flow. And the sooner we do that, the sooner we generate free cash flow, the sooner we can send money back to investors and invest in the bigger potential in our property positions. We don't need to go out and buy, the next growth for the company. It's in our portfolio already. We've got some 30,000 acres of land, 2 large gold systems with open potential. And so the next allocation of capital, once we start generating free cash flow, is going to be clearly to expand on our resources. So it's a balancing act, Antonio. And what I'd say is, job one, move Mercur into free cash flow. And so emphasis on engineering and all the steps required to get through permitting. Job two, continue to unlock and demonstrate the value in Beartrack-Arnett while we move our permitting preparations forward there. And, our end goal is 160,000 ounces a year of production from these 2 projects from open pit heap leach. Beyond that, the next phase of development into the underground. So it's a pipeline, and we're moving as quickly as possible to free cash flow, with Mercur being at the front of the queue.
You've optioned Mercur from Barrick. Is a decision in any way related to that option? Because it is a sizable option with what's happening here. So yeah, is a decision in any way related to that?
No, actually not. And in fact, what's interesting about the Mercur land position is that the Barrick component is only a portion. It's about a third of the overall land position. We've got a massive land position there with potential on both limbs of the anticline, and so it's a part of the picture, but it's only a part of the picture. And I think what you're referring to is the $5 million payment. Yep. That we have to Barrick to complete the earn-in agreement on the claims that came from Barrick. That payment is due early next year, and with the $29 million we raised, we're funded to look after that. So it's not a consideration for us in terms of our strategy. What is a consideration for us is to minimize equity dilution to our shareholders as we continue to progress the value in the company. And so, we want to move through milestones here of de-risking metallurgy, de-risking the resource, and we also want to move as quickly as we possibly can to free cash flow, and at the same time show the broader potential in the portfolio. We don't want to get caught with our pants down, so to speak, with an unsolicited bid from some party that says, look, these guys have 2 big gold systems in the U.S. They're worth a hell of a lot more than the 0.15, 0.2 times NAV that the company is trading at right now. Let's just lob in a bid and take away all that exploration potential that they have. So we've got a balancing act here between investing and going to free cash flow and investing where we can to demonstrate the continued exploration potential in our portfolio. So it brings me back to about 50,000 feet of drilling plan for this year, 17,000 meters, and unlocking value with 4 drill rigs on the projects.
To that last point of the takeout, and we've actually talked about this before, you and I, Hugh. Essentially, why did Barrick/Taura leave if the project is easier, quicker to bring to production? But from your conversations with them since then, or since we last spoke, is there a world in which Barrick comes back to the project, and where would you have to push the asset to, or what would the asset have to look like? Is there a specific scale or NPV or IRR or something like that could have Barrick gaining interest in Mercur again?
So great illustration of how the dynamics work in our business is the Malartic deposit up in Quebec. Recall that Malartic was owned by Barrick. And these are friends of mine at Barrick who made a decision to sell the Malartic asset to a junior. That junior was a Cisco under the leadership of Sean Rusin. Sean and his team did the hard work that these big companies find very difficult to do, moving a town, permitting, putting together the land position, doing the exploration, taking the risk on the drilling. And of course, what do we have today? We have a 1 million ounce a year producer that is a foundational asset in the biggest gold company by market cap, one of the biggest gold companies by market cap, Agnico Eagle. And so, this story has played out in the past. And I would say with Mercur, we've got a lot of interest from the largest gold companies and some of the intermediates and smaller folks. There's a broad amount of interest in these deposits. Why? Well, Mercur is a Carlin type system. These are the large gold systems that underpin some of the most valuable gold mines in the world. And in the case of Beartrack-Arnett in Idaho, we've got an orogenic gold system tracked now over 5 kilometers of strike, 4.6 million ounces, and open for another 5 kilometers. So these are big gold systems. You're absolutely right to ask the question, about interest. It's quite broad, and it goes to some of the biggest gold companies in the world. I won't comment specifically about Barrick, but the illustration on Malartic is that oftentimes, the bigger gold companies will find it too difficult to do the work that juniors like Revival Gold do in knitting together land positions, taking the high risk capital into exploration, talking and working with communities to get to mutually rewarding outcomes. And then what happens in the case of Malartic? It winds up back in a big company's hands once that work is done, and for great reward to the investors who took the risk to put the land position and the package and the mine together in the first place. So it does happen. There's lots of other examples of that. Look at Skeena today, another Barrick asset vended off to a junior that is now put together a very substantial resource and project with backing from Orion Mine Finance, now funded. This is another success story, but there's lots of others. I love the one about Remarco. Diane Garrett did a wonderful job of putting together the Hale project with her team against all odds. And I was at Kinross at the time. We sold Remarco the asset. So I can tell you from personal experience, it's very difficult for large companies to do what the likes of a Remarco or an Osisko or a Skeena or a Revival Gold do, which is the hard work of delivering value for investors. They're much more interested and focused on the producing assets, bringing low cost capital to bear, and delivering cash back to shareholders. That's where majors are today, and the consequence of that, not to take too long on this point, Antonio, but the consequence of that is that the Barricks of this world have really given up on reserve replacement and instead are chasing high political risk and copper, because it's a very difficult business to grow in gold, and they know it.
In my understanding, they're also chasing size, though, which is why I asked you, what does an asset look like where a Barrick, it doesn't have to be Barrick specifically, but a Barrick-sized corporation gets interested into it? What does Mercur have to look like in terms of, again, NPV or IRR or anything else, any other metrics that you think would attract a major?
I'm going to dodge the question because I don't know that strategy is what works for investors. What works for investors is to surface underlying value in these assets and do so in a low risk manner. And I look at the companies that have performed for investors like Alamos Gold, for example. Alamos Gold started with a cast-off asset from Placer Dome, a major gold company focused on big multi-million-ounce gold projects. Cast off an asset, the Mulatos project in Mexico, which became the foundational asset for Alamos. And Alamos didn't have to be a multi-million ounce producer to make a lot of money for investors. Richemont, another company that made a lot of money for investors, and then it was rolled into Alamos, if again, not a particularly big mine. SSR did the same thing. I think the sweet spot in our business, the place where investors can make the most money in the gold space, particularly when the gold price is going up, are some of these more entrepreneurial mid-cap companies, the Bemas, the B2 Golds, the Alamoses, the Richemonts, the Skenas of this world that put these assets together and deliver value for their investors. Going from that plus or minus 200 million, 500 million market cap to plus or minus 5 billion. I think that's the sweet spot for investors. So I'm going to dodge the question and say, what are we trying to do here? We're trying to make money for investors. We're trying to look after our communities and look after the people who deliver all this value for the investors in the communities. So those are our three objectives, and how best to do that. By de-risking assets, by taking them forward and unlocking value where others failed or just aren't equipped to do so.
Well, I do want to ask about part of how you're hoping to add that value, and that's the 13,000 meters of drilling. That's it's currently ongoing. You've got first rig was on site. We'll talk about the second one as well. How much of the drilling will be focused on resource conversion versus essentially in step versus step out here, infill versus step out? Yeah.
Most of the drilling at Mercur is focused on de-risking the asset, right? So. Why is that important? Because the next financing that we want to plan for, we want to be in a less risky situation and attracting capital from long-term hands. Potentially look at some non-dilutive structures. And so the way we do that is by de-risking the asset. And so that's where the emphasis of the drilling at Mercur will be. I can't give you an exact number, but we will be testing for expansion possibilities around the existing 1.4 million ounces of resource. We already have a 300 million MPV project at 2175 gold. Goes to over $700 million of NPV at $3,000 gold. So I don't think we need a lot of dilutive drilling into big speculative exploration targets, but we can add around the fringes of the existing deposit. And instead, where we're putting our high-risk exploration money is into Beartrack-Arnett. If we can unlock potential along the 5 kilometers of open strike there, I think that's a huge value add for our investors. We don't necessarily need to drill off resource there, but if we can find another high-grade zone in the deposit, if we can extend the existing high-grade zone at Joss in our Beartrack-Arnett project, I think that's going to point to a lot more value on that project. So if you think about it as a portfolio, we de-risking Mercur, moving that forward towards support of a PFS and the start of permitting, and at the Beartrack-Arnett taking more of an exploration bet to unlock the value in that asset.
Is all of that work, the infill as well as a potential step out here, is all that permitted?
Yes, I would say we're in really good shape on the drill permitting. We've got 6 drill permits at Mercur. We are in the process of adding to our permitting, and so that will expand our ability to drill. But we've got a lot of drill options on our Mercur project. Again, in the main Mercur area, it's on private ground, and so that makes the process a lot simpler. We do have public land in our possession in the Mercur areas, but we're not looking to do any drilling on public lands this year. All of it will be on private lands or state lands.
How are you going to measure success from this program? What is it that you're hoping for essentially to see here? And it's a couple of things based on what I've written down on what you just told me. It's a couple of things that you're going after. So maybe you can just walk me through it again, sort of bullet point by bullet point. How do you measure success? What's the most important thing, and what are you hoping to see?
Conversion of inferred to measured and indicated. So approximately 60% of our resource is already in the measured and indicated category. Of course, we'll need to move the remaining 40% of the resource into measured and indicated to complete a PFS. So that's job one. Job two is to expand the metallurgical test work, the column test work, which you'll recall last year we completed 5 column tests. We got an average of 84% recovery in those column tests, but we need to expand that work out across the deposit. And there's an opportunity there for us to use different crush sizes in our analysis. We used half-inch crush size on the 5 columns we did last year. So we want to look at variable crush sizes and see if there's a more optimal crush size for the project going into the PFS. So there's the second item there is the metallurgical test work. And the third key item for us this year is to be able to advance our permitting preparations and start with baseline work that allows us to formally commence permitting on Mercur at the beginning of next year. We'll have more of an update on that as we expand out our consulting team and our internal team to take on the permitting, but that process is underway now. We're in preparations right now. We've got work streams going on. In fact, as part of our drill permitting, we've already commenced with archaeological work, which will be a component of the permitting process for Mercur.
It's a 2-rig program, I believe, right?
Right now at Mercur, we have 2 rigs, and that was what we planned to do. But again, with the backing of EMR and Dundee, we have the confidence now to bring in a 3rd rig. And so we're working on doing that. Should be on site by the end of September, and we'll have more of an update on that. But that will allow us to move more quickly through the drilling that we have planned and potentially look at supplementing that for the beginning of next year. We'll see how this program goes. And how much more drilling we'll have to do in support of the PFS. But I would anticipate we're going to want to continue to drill and then shift into more of that resource expansion mode that we were speaking about earlier. So job 1, de-risk. Job 2, resource expansion. Job 3, broader exploration with the drill bit.
Mm-hmm. How's that drilling been going so far? Drilling conditions and everything? What kind of efficiency are you getting out of those 2 rigs?
Good question. It's always a challenge to get a program started up of this magnitude. And what I would say is that we're having some really good success on the RC drilling that we're doing, reverse circulation drilling. It's a bit more challenging with the core. We're taking PQ, so large diameter core, for these metallurgical test purposes. And it's tough work, but the guys have it in hand, and we're on schedule to complete our programs by the end of this year. And results will compile and be out. Probably, I'm anticipating that we'll have an update for the market in September, and we'll continue to put results out through until likely end of first quarter next year. There's a lot of results to get out as we put this program to bed.
And that would have been my follow-up question as well, is how do you announce those assays to the market? Is it, I suppose you're going to be bundling it, but are you going to be keeping yourself to a cadence where it's like every 2 weeks or every month or something like that?
Yeah, I think the program, it'll be driven by the technical objectives. And just to bring you into the tent a little bit, one of the things we need to do is make sure we're getting the metallurgical samples from the right spots in the deposit. And so we have a plan to drill, but we also have flexibility in our plan. And so what we'll be doing is we'll be looking at the drill logs and some of the early assay results to fine-tune our program as we go. And so what I'm saying in that is the emphasis is not on getting drill results into the public market. The emphasis is on optimizing the value we get out of our dollars spent in the ground. And so if it means that we have to focus on metallurgical drilling or we need to focus on finding new information about the structural environment, as opposed to finding assays and doing all the work that's required to focus the team on putting assay results out. I think our emphasis will be on optimizing the value of the program over getting assays out just for the sake of getting assays out. It's a long-winded way of saying we will have results. The cadence of the results will depend on the technical progress and the priorities for the team in terms of delivering on the program for our overall objective, support of the PFS for next year. But what I can tell you is, generally speaking, with 3 drill rigs going and all of this work crammed into the next 3 quarters, it's going to be a very newsy fall and winter season.
Weather-wise, does the winter season change anything for you in terms of efficiency? Are you going to slow down toward? I know you can work year-round, but are you going to slow down during the winter?
Well, this is going to be the first year that we go right into winter with our drill program at Beartrack-Arnett. So we're making special preparations around that. And the team is gearing up to be able to move as efficiently as possible. It is more challenging because, of course, we have water involved in drilling and water freezes, and we need to keep roads open and all those good things. But we expect to continue to move with our programs through into the winter season, and that's really new for us, right? Because usually what happens is we go through a campaign in the summer and we release results in the fall, winter, and then we kind of get ramped up again. This year, it's going to be newsy right through, first quarter and even into the second quarter next year with what we currently have planned. And of course, plans will be added to and adapted as we go here. So definitely stay tuned. I think there's a big change at Revival Gold with the backing of strategic investors like Dundee Corporation, who came in earlier this year, and now EMR Capital. We are fully funded, and we have the backing to take these assets into production. Very importantly, these are not, multi-billion-dollar projects. We can advance these projects with the capital that these two strategics bring to the table, and so our job is to de-risk the assets, move them forward as quickly as possible, and for all investors to fund on the most shareholder-friendly basis we can. So it's a new place for Revival Gold to be in, to be able to pursue these projects with 4 drill rigs and a full court press. It's really great for the team, and we're totally geared up for it. Everyone's super excited and dialed in to be able to do these programs and move as quickly as we can.
Couple of things to touch upon there as well that I've written down. So we'll go through them, and we'll definitely be talking about the 4th rig, which is going to be at Beartrack-Arnett as well in a minute. Will the results from this drilling, though, at Mercur, will they change the cutoff grade assumptions that you used in the previous PEA? Again, given the nature of the deposit, that's an important point. That's why I'm bringing it up.
They may up or down, and really the answer to that question will revolve around a whole bunch of different technical aspects. I think one of the main things that we're going to be looking at is the optimal crush size for the project. And is it 1/2 inch? Is it something bigger? And if it's something bigger, can we shave off operating costs, therefore reduce the cutoff grade? And what do we give up in exchange for that? Will the recovery dramatically change? You remember with our column tests from last year, we got very rapid rate of recovery, almost 90% of the recovery within 5 days of leaching. So it seems like there is a lot of opportunity here to optimize on crush size, but we've got to expand the available data we have, and we'll see how that impacts cutoff grade. Likewise, capital costs can move around. With the backing of EMR Capital, I think we're less sensitive to whether it's a $200 million capital or a $250 million capital. And so maybe there's some opportunities to grow the rate of production and increase the pace of free cash flow generation from the capital that we do spend. So these are things we'll look at as well. But undoubtedly, there will be some fine tuning along the way here, and I would say there'll be some pluses and there will be some minuses, and our overall objective is to deliver up at a minimum the kind of project we saw in the PEA, something that generates 27% after-tax IRR at 2175 gold is a pretty compelling project, particularly when you're in a $3,500 gold environment, and that that IRR almost doubles. It's an exciting place to be.
Have you changed the way you incentivize insiders in the meantime, though? Because you mentioned that you're getting targets in mind. So is your guys' bonuses going to be attached to a specific MPV number or a specific market cap or a share price or something like that?
I'd say in a smaller company like Revival Gold, with the kind of independent board we have, the experience that our board has, it'll be a little more nuance than just that. But absolutely, in delivering value for investors, we want to reward our team. And make no mistake, it's a competitive environment for the kind of folks that we have. There is a lot of activity going on, and just as we have to compete for drill rigs and we have to compete for engineering A teams, we have to compete for the talent that will deliver a mining project for our business. So, and we are a a business that pays relatively low base salaries and is highly focused on delivering value for investors. So you can bet that our team is going to be aligned with investors through incentives that are marked to delivering value and delivering share price appreciation. That's how we think about the business, is as owners and what we can deliver for owners and for our communities.
What do you think is the biggest risk in trying to unlock that value for Revival right now?
I'd say number one is that resource conversion at Mercur. Number two is to broaden out our metallurgical data set for Mercur. What I would say is not a risk for us is the geopolitical side. We're in a very favorable environment for domestic mining of gold. Likewise, I would say the metal price has never had a more favorable outlook than I think it has recently, and for good reason, right? So those things that we can't control are in our favor. Geopolitical risk and gold price outlook, and then on the project side, because these are proven past producing sites, we know they can be permitted. We know they can be operated efficiently. We know that they can be staffed. We know that they're in locations there where there's support, where we're not going to have people coming out of the woodwork, creating difficulties around operating, and likewise where we can attract people to work, and where we can be a productive member of the community. So all of these things that I'm speaking about are favorable in respect to these projects and our development. The capital being as low as it is, the fact that we've got power and water and roads to these sites, which are very complicated linear permitting items we don't have to deal with. These things are all favorable for Revival Gold, and really, this next year is a huge value unlocking stage for us, and de-risking stage for us. And I think if we look at the investor outlook, currently trading at about 0.15 times NAV, 0.2 times NAV relative to where we can go, I'd say there's a ton of upside, and we've got the backing to be able to spend the money wisely and get to the outcome that we're all looking for, which is a successful gold producer in a great location, delivering cash back to investors and continuing to invest in future exploration and long-term growth.
I also noticed that you talk about waste rock, which is assumed sterile in a PEA from a few months ago, but you suggest that there might be something in there that could add value as well. I'm generally careful when I see things like this, because that you know they rarely pan out as upside, so to put it, in my experience as well, largely due to a couple of things. So there's often heterogeneous nature of the waste rock. It's sometimes poorly controlled. There's of course there's a met challenges oftentimes due to variability and whatnot. So talk to me more about that. Why the confidence from your end?
Yeah, all your points are all valid, and that's the reason why that waste rock is considered waste
Hmm.
in our PEA. So we're not giving any value to that rock, but it's an interesting opportunity, as is the historic leach pad at the Mercur site. And what we've seen in the past by operators such as ourselves is that there's an opportunity to deliver value from that material by putting it on a pad. Maybe it's a run of mine pad, maybe it's crushed. Um, uh, Typically, it's at the end of the mine life, but it's an interesting opportunity, particularly when you've got, intercepts through that waste material grading higher than your resource grade. So we have to look at it. The biggest challenge with these kinds of situations is it's not rock in place. It's broken rock that has been mixed up and garbled together. And so we need to identify where it's come from. We need to look at the homogeneity issue that you raise. We need to consider the metallurgy and how it will perform on a pad. All of these things are in front of us, but it is something we have to look at, and we want to look at. And if you're already paying to take that material out of the pit and put it somewhere, it's not much more incrementally to crush it and put it on a pad rather than a waste site. So those are the things that we'll look at. Not making any promises about what the outcome of that work is, and none of that is reflected in our NAV. But some of the smart people who look at our project have definitely raised this as an opportunity for us and one that we need to explore, which we will.
What do you, or how much do you know about the arsenic levels here in the waste rock, and how much of a challenge could that be?
There's no real deleterious items, metals in the material we're seeing at Mercur. In fact, it's a pretty clean site. The challenging material that we have at Mercur is carbonaceous material. There's a layer of shale that was at the top of the sequence previously mined, and we do see it in the deposit. So we have to model that very carefully. For those of your listeners who may not be aware, carbonaceous material is problematic in a leach pad. So you don't want to mix clean ore with carbonaceous ore on a pad. It'll create problems in the leach pad. So we segregate that material. It does contain a lot of gold. And in the past, what Barrick had done with that material is put it through a mill, relatively high recoveries and relatively good grades, and lots of money made from that. We may have a next phase to this project beyond heap leach, but right now we're focused on heap leach. And so the modeling of carbon, both in the deposit proper and in any potential waste material we might look at, it will be key.
What does that mean, being key? I mean, what could the scope be if this works out? What tonnage of waste fill is in consideration right now? What recoveries would be doable? Do you know anything more about that?
No, it's too early to say, Antonio. Our focus is really on the rock in situ, the plus or minus 60 million tons at zero point 0.6 grams, the 1.4 million ounces of resource, the mining of about 100,000 ounces a year over 10 years. I think that's a big enough prize right there. But on the increment, as we think about the longer term, we'll certainly want to test this material and see if it's worth spending more money on definition, etc. But that's down the road. Quantities, average grades, recoveries, metallurgical response, generally, all those questions are for down the road.
What kind of do you have to do? Because I know you drilled one hole there essentially. How much more would you have to work on it? When do you think you're going to have some news to the market?
Typically, in a situation like this, you need a lot more drilling than in a in situ deposit, and that's because the emplacement of the metallurgy of the gold is completely arbitrary. It's was man-made as a waste pile by very definition. So a lot more drilling. I can't even tell you how much more drilling. We haven't had a chance yet to have our consultants look at that. Again, our focus is on the in situ rock and what we can do in the short term to move that all to measured and indicated and look at expansion possibilities on the fringes of the existing deposit. Yeah, lots more work to do. I don't think, I don't think it's something we'll have a lot of news on this year, but we will penetrate that race rock and see if we can scope out a bit more about it as we go here. And it's definitely something we're interested in tracking. But emphasis here this year is on those those other aspects of the program I've described.
You do want to include it in the next type of study, though, be it I guess an updated PEA or a PFS, or do you not?
I think realistically, it will fall into the study after that. I mean, just based on the amount of work one would have to do. But again, if you think about it from a strategic step back and you look at opportunity in a company like Revival Gold, where is the opportunity? The opportunity is in exploration. It's in understanding our broad land package. The opportunity is in spotting technical innovations. We put out a press release today on the collaboration that we have with Dundee Sustainable Technologies around the metallurgical recoveries and prospects for the second phase sulfide project at Beartrack-Arnett. These things are really interesting, and these are groundbreaking value catalysts for the business. So if you think about it from a strategic point of view, while we go moving along, progressing the basic blocking and tackling towards free cash flow, the other thing we want to be doing is pointing to future value catalysts, because we don't want to get caught, I use that phrase again, with our pants down, where somebody comes along, makes a bid for the company, and fails to appropriately price in the exploration potential or the value unlock that we can potentially get from metallurgical processes, or as we've been talking about, the possibility of extracting gold from the previous leach pads or the waste rock that we're already extracting in our mine plan. So these are things that are potential future value catalysts. Can we lock them all down with the I's dotted and T's crossed? No, but we definitely want our investors to know about them before somebody comes along and throws a bid at us that doesn't fully value what's under the hood.
Well, again, you've mentioned that a few times since we started talking. Is that a real risk right now? Like, is there a risk of a premature takeout? And again, realistically, and this is, I suppose this could invite a lot of promotional speak, of course, but I'm really just wondering, where is that coming from? Is it a realistic scenario here?
We're a public company. Control is in the public market. And so make no mistake, the big gold producers need deposits like ours. The intermediate gold producers, and there's a lot of them. There's over 3 dozen of them. And so, as we unlock value and as we de-risk these projects, if our share price doesn't move up, somebody's going to make it move up for us. And so we want to be sure to get the story out, demonstrate where the value is in the company, And I've already told you there is a lot of strategic interest in the company. It's our job to make sure that we surface the value that those parties are seeing in our company, and make sure that the public knows about these opportunities and possibilities, both the opportunities and the risks associated with the business. Of that, to be fair, is risk associated with the business, but as we take these steps methodically to advance our assets and we de-risk, value should go up, share price should go up, and if it doesn't, I think we become at risk of having somebody else come along and deliver that value, and for the benefit of their owners rather than ours.
Back to the waste for a second. Would that require additional permitting? Is that something you have to start thinking about right now? Or again, because you said it's too early to talk about specific numbers, but permitting, you oftentimes want to be, ahead of it. So yeah, talk to me about permitting.
Yeah, one of the nice things about this Mercur project, I think I've said it twice or three times already, but that the resource is on private ground.
Yeah.
So too is the waste rock and the leach pads we're talking about. So that allows us a lot more flexibility around how we approach permitting. So we're a little less concerned about that than we might be if we were on federal land. And we would be a little less concerned about it if we felt there was water at play that was going to be a problem for us, or you asked the question about deleterious elements. There is nothing that we're too concerned about in terms of deleterious materials either. So I think that gives us a lot more flexibility as we think about permitting and permitting preparations.
That's fair. I think I'm getting a better idea of Mercur. It seems like we're going to be talking about it a couple of times over the next couple of months as well. What's happening at Beartrack here? Again, when's the rig hitting the ground? When do you have assays out? Talk to me about timelines.
So rig contracted and set for arrival by the end of September. Drill roads are already under construction. Drill pads, we are permitted there. Of course, we have a very extensive and wide permit for the Beartrack-Arnett project. It's a real accomplishment for the company and an asset in terms of our flexibility and what we can do. The program is going to be a relatively modest 3,900 meters of drilling, and its focus is around continue to push out the potential of the Joss underground deposit. And remember, our last drill holes at the very south end of the deposit there were over 110, 115 meters of 3-4 gram material with a high grade core to that deposit running anywhere between 5 and 12 grams per ton gold. So we want to continue to see how that progresses, and we'll be doing some wedge drilling associated with that program this year, trying a new technique to get more value out of the drilling that we do. And then the big step out this year is going to be to the south of Joss, where we have a confluence of structural elements undercover. This is a blind target for us. This will be the first time we've drilled here or anybody's drilled in this location. It's a target that we've been working on building the business case for over the last couple of years with geophysics, soil geochem, and mapping in the field. Our chief geologist, Dan Pace, has done a lot of work around designing that program. We've got about 3 or 4 holes planned out there in the Sharkey target area, and we're really excited about that. That's something we've been wanting to do for a couple of years now. We've been planning it very carefully. It has to fit, obviously, with our overall capital budget, and this is the year we're doing it, and I'm very excited about what that could unlock for us.
Given the, I want to talk about what you just mentioned previously as well, the news that you had just before this call, GlassLock, given the arsenic levels in concentrate here, is GlassLock essentially the only viable option though for moving Beartrack-Arnett forward? Is that why you're moving with that, or talk to me about more about that?
So the first phase at Beartrack-Arnett is open pit heap leach, of course, and that's where we've focused all of our attention. So we're not looking at doing any milling on the Beartrack-Arnett project as it currently stands. But again, under the heading of making sure we unlock this potential, we've got over a kilometer of high-grade strike in the deposit. We've got some 900,000 ounces at 4 grams in underground material in sulfides to start with. And so the opportunity there is for a small follow-on underground operation at Beartrack-Arnett once we complete the heap leach as a second phase to delivering value for our business. And we think that can take us, aggregate in the company up north of 250,000, maybe to 300,000 ounces a year of gold production. So that's the concept. We've done some work on that with our team led by John Meyer, our VP Engineering Development, who has a ton of experience in this sort of stuff. But along the way, we looked at our opportunities for concentrate sales from Beartrack-Arnett, and we have lots of possibilities there, particularly as it's a high-grade con. But in our collaboration, in our strategic partnership with Dundee Corporation, part of the attraction for us, and frankly, part of the attraction on the part of Dundee Corporation was that, this possibility of unlocking even more value from the high-grade concentrate at potential concentrate at Beartrack-Arnett. And so we started out with some testing in the spring on the possibility to take arsenic out of that concentrate, boost the grade even further, and open up the possibility of direct ship to multiple smelters around the world. And so that's the value add here is, yes, we have the possibility of creating a concentrate and selling that concentrate into Nevada or, into Idaho once Stibnite gets going with its project. But can we enhance the value of that concentrate through the GlassLock process to broaden the universe of opportunities, the places we could sell that con? Mm-hmm. And the answer to that question appears to be yes. And we'll do a lot more testing, of course. But in the initial instance, if you look at this as technology and the opportunity proven in Namibia with the precious metals, Dundee Precious Metals smelter there in Namibia, demonstrated to be successful on a commercial basis in Canada and the US, elsewhere. This is really interesting for unlocking value, further value at Beartrack-Arnett. So we're really excited about it. Really happy to be working with Dundee Sustainable Technologies on their technology. It's a win-win, and we'll do more work on that as we go here.
Would GlassLock concentrate then still go to Tsumeb or another third-party smelter, though? Or can you maybe talk to me about that, how that would work?
Yeah. So I'm not the expert in the process, but from a very high level, what we do is mine the rock, mill it, float it. We get about 94% recovery of the gold into a concentrate. And the next question is, what do we do with the concentrate? We can either sell that to a POX plant in Nevada or elsewhere, where the gold will be recovered. It's relatively high-grade concentrate at 50, 60 grams per ton gold. So very attractive con, and with high sulfur sulfide content, which is attractive to the for energy generation in the POX plants. But the GlassLock process basically vitrifies the arsenic that's in the rock, so it makes it and renders it inert. We can put it as backfill in the mine. And then we have a concentrate that not only has a higher grade, perhaps 60, 70 grams per ton gold, but that is free of arsenic. And that opens up the possibility for that concentrate to be shipped overseas to South America, to China, into the domestic United States. We've got a big smelter in Utah that would love to have high-grade gold concentrate to process. So that's the possibility and the opportunity for us in the process. So once we finish floating the con, We run it through the GlassLock process, which is a small facility, and it allows us either on-site or off-site to take the arsenic out and render an inert product, and then free of arsenic and at a higher gold grade. We'd ship that concentrate to any number of hungry smelters.
Have you guys already talked about who holds the long-term liability of this work? I mean, is it going to be you or Dundee, the process holder? Like who holds the liability?
What liability are you referring to?
Potential liability, the potential arsenic liability here, because it's essentially, it's locked in glass. That's why GlassLock. But there still could be a liability here that someone has to essentially put its name, or his name under.
Yeah, there's actually, it's quite the reverse. Arsenic is a naturally occurring mineral in rock. And so, we always have arsenic and lead and gold and iron freeing up into the natural environment from rock exposure, right? And what the GlassLock process does is render that arsenic inert. In other words, it will not it does not freely release into the environment. There's no propensity for the arsenic to be attracted to water or to get into a biological system. So it's actually the way that you look after arsenic once freed in an efficient process. The other way to do that is to run the arsenic through a POX plant where it again becomes inert and it's no longer a risk to the environment.
Well, what about that part from the regulator's perspective? Is that something the regulators have already looked at, or is it too early to talk about it?
Yeah, again, I'm not an expert in the steps and the regulations and the specifics, but the answer to the question is yes. We actually render a product that is that will meet all environmental criteria in the GlassLock process, and that's pretty interesting because it unlocks a lot of potential for revival gold. And that we're no longer shipping a concentrate with that will have scrutiny around how it's moved and in what format. This is commonplace for concentrates to be well managed in their transportation because of the deleterious elements that are in concentrates. And so if we can improve on that concentrate at the mine site before we ship it or somewhere, along the path, that will lower costs for us and improve the friendliness of the overall process to the environment.
Right.
So this is cool. This is cool stuff.
Yeah.
It's another example of how the mining industry, does have a lot going on. The electrification of mines, the use of software technology, remote sensing, safety technologies, metallurgical processes and techniques, closure processes and techniques. I mean, there's a lot going on in the mining industry, which is, pretty cool. Using technology to do a better job every day.
Well, it's interesting to see how this is going to be developing, or how this story is going to be developing. I think it is sort of a lab sized right now. Like we haven't really seen this technology deployed at scale, specifically the Dundee technology, if I'm not mistaken.
No, that's not true. Actually, it has been at an industrial scale in Namibia. Yep, and it worked quite well.
Yeah, but is that the same technology with the same type of ore that they're using as what's going to be done at Beartrack-Arnett?
Oh no, we've got obviously we've got more testing to do to fine tune the process and all the cost inputs, right, and how that spins out, and so there's a lot more work to be done. But to your question about, is this a technology that's been proven? Yes, the answer is yes, and at an industrial scale. And listen, if we don't take chances on new technology and new approaches to things, we'll be doing the same thing we did, decades ago. Heap leach processing came from innovation. The ore sorting that we're employing now to do a better job of processing ores and getting more efficiency out of our equipment has come from technology and innovation. AI, the application of AI in exploration is something that our geologists have been doing in the mining industry for at least a couple of decades. In fact, at Revival Gold, we're using AI to record, image all of our chips in the RC drilling now. And this is really exciting stuff because it allows us to take risk out of the process of logging the chips, and it allows us to use the technology to get better outputs for our geological modeling, which improves the predictability of the model. So, sure, we could just follow the old way of doing things and not innovate, and not bring technology into play. But I think the opportunity in the industry, as we have more of these tools available, is to lean in, and so we're doing that.
I'm actually looking into the Namibian operation that you talked about right now as we speak, and it's interesting to look at how that works. So I'll just throw that in there for people watching or listening, that they could look that up if they're interested in that process, because it's interesting stuff actually, and that's all on the topic of innovation here. Back to talking about money here, Hugh, before I let you go, I see that you've spent a little more money the first quarter of this year than the same quarter of last year. So you're sitting at an average of about $190,000 a month now. Is this where you want to, or where you expect G&A to remain, or do you foresee it going up or down from here?
G&A will definitely go up. We're spending a lot more money, doing a lot more activity. And so, and we've just been through a big push with due diligence with multiple parties. And, I'm not at liberty to disclose all of the discussions that took place, but I can tell you it's been a very, very busy last 6 or 7 months for the business, not just in ramping up operationally, but in on the corporate side with the activity around this financing we just completed. So yes, G&A is going up, and our overall spend is going up. I think this year we'll probably spend something in the order of $20 million overall, and it's a big ramp up.
Well, I see that your marketing expenses have also gone up. What's the marketing plan for spending, but also what are you hoping to get out of it?
Well, as we were talking about earlier, really for business like ours, we have capital access, we have the assets, we have the people. So the important thing for us to do is get that message out, and that requires marketing. And it's really, really important that we make sure that our investors and potential investors know the opportunity that we have here. We have a market cap right now of about 100 million US relative to underlying NAV in engineering studies of about $1.2 billion at $3,000 gold. So 100 million market cap with about 30 million of cash Canadian and $1.2 billion of NAV in the business. And that's just NAV on the 2.5 million ounces of the total 6 million ounces of resource that's been engineered. So we want to get that message out. We want to make sure our existing investors know about the opportunity. I mentioned earlier that I just was in the market myself buying shares. And I think we'll see more of that activity from insiders as we go here. That's our track record. We believe in what we have here and the value. And so long as we're not in front of investors with our insider purchases, I think that's fair game. And it's because we think we have a ton of value at the table here. The analysts that are covering our stock have increased target prices post the financing. Why? Because they see that we can now deliver the value that's inherent in these projects, and that we have the team that can do it, and the trust of very senior industry players like Dundee Corporation and EMR Capital that are standing behind us. So you asked me the question, will we be spending money on marketing? Absolutely. We want to get the story out. Why is that of value to investors? Because as we move the share price higher, we can expect that our cost of capital will go down as we think about the potential development of the mine, which is something that will hopefully take place in the next 3 years.
And again, hopefully loads more conversations that you and I will have in the meantime. I think I've been through most of the questions that I had here for you, Hugh. What's the most fair criticism you've heard of Revival Gold since we last spoke?
I think the fairest criticism of us is that we are a small cap business, right? And so investors have seen relatively low risk to date in just chasing after the broader market index, right? The S&P 500 has performed beautifully. And the price of gold has performed beautifully better than the S&P 500 over the last 20 years and in the short term. And so the fair criticism of the junior space generally is, why haven't you performed? And I think it's a function of the fact that we are small cap, we are more risky. But boy, those wins can change awfully quickly. We've seen it before. And when you're trading at the kind of value that Revival Gold is trading at in an industry dynamic where more senior gold producers are making a lot of money, paying down any remaining debt they have, big dividends to shareholders, and looking for what's next, I think the setup is pretty exciting. And so fair criticism, performance of the junior developers has been relatively poor relative, to the bigger cap index, the metal itself. But I think that dynamic's going to change, and we're ready for the snapback.
Well, I really do appreciate your time. What am I forgetting to ask you, though? What did you come here hoping to talk about that I failed to bring up?
You've been awfully accommodating here. You've let me go on and on and on. Thank you, Antonio. I appreciate the time with your audience.
Thank you so much for doing this. And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is, and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."